Hi everybody, Gary Larson here. Today let's talk about long-term care. Now long-term care is a subject that most people don't want to talk about. I think because they think it's nursing home care. And the idea of going to a nursing home terrifies a lot of people. And because of that, they ignore the probability that they're going to need it. In fact, industry standards say that 70% of us are going to need some long-term care coverage at some time in our life. So 90% of the people don't even have insurance for it. And the reason is simple. There's denial. We don't think we'll ever use it, and if we did, we don't want to go into a nursing home. But the thing about long-term care insurance is it can cover you in a lot of other places. Yes, it will cover you in a nursing home if you need it. But only about 10% of the people who need long-term care actually go into a nursing home. The rest of it is in other places. For example, there's assisted living facilities. It can be spent there. It can be spent if maybe you want to stay at home and have someone come in and help you. It can be spent there. It could be adult daycare. Maybe you're living with your kids and they just need somebody to help you during the day and they take care of you at night. So the thing about it is, it's expensive. Nursing homes traditionally cost somewhere between $4,000 and $6,000 a month. That's a lot. Even to have somebody just come to your home can cost about $100 a day. That's $3,000 a month. So it's expensive. And in fact, the people who don't have insurance are what we call self-funding, which means they're going to pay it out of their savings. And again, statistics show that the person who pays with their own money usually runs out of money in 13 months or less. Now, that's a lifetime worth of savings gone in about a year. So you can protect yourself from that. But the other reason people don't want it is because they think, well, if they never do use it, then they've just spent all that money on premium. And they don't want to do that. So what if there was an alternative? I've got one. In fact, listen close here because this is very interesting. There's a life insurance product available that will take a lump sum of money. For example, let's say you had, $50,000 sitting in a low yield CD or an annuity, something like that. You could reposition that money. What I mean is you could take it out from where it is right now and you could buy a single premium life insurance policy from this company. And ideally, that money could double. So your $50,000 could be worth $100,000 to your heirs if you die. Another nice thing about that is the money transfers probate-free and income tax-free. So your heirs are going to like that. But what does it do for long-term care? It actually will triple the face value of the policy. So what I mean is, in this example, the death benefit's $100,000. It would go to $300,000 available if you needed long-term care. Now that's pretty amazing, okay? And the best part of the whole thing is if you never use it, or at any time you just decide you want your money back, you can get all of your money back, no penalty, at any time you want. So you've got the same liquidity as you would in a CD, for example. Now, that's great. All right, I think that happens to be a phenomenal product. You've got 100% liquidity, and you've got all this protection, and all you're doing is repositioning money. So that's one way you can take care of long-term care without buying an LTC product. The second way is you actually can buy term insurance, term life insurance. And the term life insurance will provide additional money up to the face amount of the insurance you buy for long-term care. So if you had $100,000 worth of face value, it would provide up to $100,000 available if you needed long-term care. And of course, term insurance is very inexpensive. And there's no additional cost for this protection. So that's another alternative. And then there's one final alternative that I know of, and that is an annuity. that actually will triple its value if you need long-term care. For example, if you had a $100,000 annuity, fixed annuity sitting somewhere, you could buy this annuity. It's a fixed annuity. You would get interest just like you do a fixed annuity. But if something happened and you needed long-term care, you could access up to 3 times the value, or $300,000 available to be paid out for long-term care from your $100,000 annuity. So there's 3 ways to look at this. All of them are better than what you've got right now. So have a look at the material here, and then contact us if you have interest. Thanks for listening.